Hi, welcome to another accounting and bookkeeping video. I hope you are doing well. I'm Nasir Ahmed with you today. Fixed asset is a significant part of any company's balance sheet. So, whenever you purchase a fixed asset, you need to record it properly in your balance sheet. You need to depreciate it properly so that after a certain point of time, you can get the actual carrying value or the written down value of the specific asset. We do this by maintaining a sheet called fixed asset register. The look is similar to this. There are some information that need to be put here. If you want to code your asset, you can give a specific asset a separate code number according to their asset class. There are asset subclass or subcode, and the asset description, and where is the asset is located, and the date or the production or the installation of the particular asset, year to acquisition, and the invoice price. And there are also need to be a column for rate of the depreciation and accumulated depreciation at a point of time, and depreciation for a specific period, which gives us the written down value on cost. That means the invoice value less accumulated depreciation to the date will give us the written down value. So this is the manual process of doing so. But what if we want to actually maintain a fixed asset in cloud software like Xero? So in this video, I'll be showing you the process of maintaining fixed asset register in Xero. First, I need to go through with the example that I will be using today. At first, at the 1st January of 2024, I will be purchasing a car by making a bank payment amounting to 20,000, and then I'll be charging a 3 month depreciation from January to March and get a carrying value of the asset. And at 31st March 2024, I'll be disposing the car with sales proceed of 25,000. And also, I have set up the chart of account or accounts head in Xero to deal with the acquisition of car. We will be using the fixed asset at cost. The type will be fixed asset. So in Xero, there are non-current asset type and fixed asset type. So any asset that you will need to be depreciated should be typed as fixed asset, not non-current asset. So I'll be using fixed asset at cost for the car to recognize the car value in the balance sheet. And for accumulated depreciation, actually this is a contra fixed asset account. So I'll be using the fixed asset type for this one as well. This will give us the accumulated depreciation for a specific asset, in our case, which is car, in the balance sheet. And the difference of these two will be giving the carrying value or the written down value for a specific point of time. So for the proceed receipt, I will be using the capital gain on disposal, which is a temporary account, as Zero Journal doesn't allow to use the bank account. So I will be using receipt money, so that I can receive the money by debiting the bank and crediting the capital gain on disposal account as other income. Then I will be using gain or loss on the disposal of the asset, which is also the other income, so that I can recognize the gain or loss incurred by disposal of the car. So in Zero, if I use the spend money to buy the car, let's say I'm using the bank account called chase checking. You can give any kind of supplier name here, like I will be using City Group. The date is 1st January of 2024. The description is purchase of a car, quantity is 1, unit price is 2000, and the account will be fixed asset at cost car. So just by saving it, we have purchased our car by making a bank payment. If you go to the balance sheet and run it up until the 31st March or 31st January, you can see there is an asset called fixed asset cost at car which has a value of 20,000. But if you go to the fixed asset register option from accounting, you can see the asset I have recently just purchased is in draft column. So just click on it and put all the description needed. If your asset has a serial number, you can give a serial number, or you are using a certain coding system for your asset, you can use that code as well. The purchase date is 1st January 2024, which has a purchase value of 20,000. Now I need to categorize the asset type here. Let's say the new asset type is motor cars, and the asset account is fixed asset at car. Uh, Previously, I have told you that whenever you are creating a accounts head under the fixed asset, uh, the creation of the accounts head under the asset will suggest you here. If you create your fixed asset under the non-current asset, the non-current asset created asset will not be shown here. So this is one thing you need to bear in mind. The asset type motor cars asset account is fixed asset at cost for car, and the accumulated depreciation account is accumulated depreciation for car, and the depreciation expense account is depreciation expense. Now you need to select a depreciation method. There are quite a few. I am using straight line method, and the average convention is I want to actually use or charge the depreciation on a full monthly basis, so I'm going to use full month. And if you want to use rate, you can use rate. If you want to use useful life, you can use useful life. For example sake, I am using the useful life of 5 years here and click save. And after that, there are also cost limit option, which means if you want to uh, depreciate your asset for up to a certain limit, like for example for the 20,000 car, I am if I want to depreciate it for up to 15,000, I just put 15,000 here. And if you have any salvage value, if you think of it like if you think the after the useful life of 5 years, the car will have a salvage value of 1,000, you can put 1,000 here and click register. Okay, one information I have missed: the place the service date from when I'm using the asset actually, and click register. Now the asset I have purchased with 20,000 value is gone from draft to registered option. And one more thing, there is a value of 17,670 667, which actually is after deducting the accumulated depreciation. And if you go to the depreciation schedule, you can say that the asset is actually depreciated up until 31st July 2024. So This is because I actually had two assets before. One is for laptop, one is for the home winding machine, and actually I have to charge depreciation up until 31st of July of 2024. So my new asset is also depreciated up until 31st July 2024. So if I run my balance sheet and income statement, so if I run my balance sheet and income statement up until March, not March, actually July 31st, you can see the impact of the accumulated depreciation, which gives us the uh, carrying value or written down value of the car, 17,667. And if I go to current year earnings, the depreciation expense will be for this 6 month period is 246645, because previously I owned two asset. Those includes the balance actually. If I go to the description, we can see that the machineries and the other asset which actually I hold up until 31st July has also depreciated. So the total value is actually for the three assets. So for my motor car, you can see this is the uh, depreciation charge for May. You can go see June as well. You can see July as well. So there are actually 6 month depreciation charged. So again in the asset register, I if you want to use rollback option, which means I want to actually charge depreciation up until 31st March 2024, just click run depreciation and use the rollback depreciation and roll back to the specific period, which period of depreciation that you want to roll back. Go back to that period. So I just use 31st March 2024 for my rollback period, and I run my depreciation. So as you can see, the last depreciation is 31st March 2024 for this asset, and which gives us a book value of 19,000, which means we have depreciated amount of 1,000 for 3 month period. So let me put this figure into my working. For 3 month period, if it is 1,000, that means for each, this will be this amount, and in negative figure. Okay, that means we have a 19,000 carrying value after the 31st March period. Now we need to dispose this asset. So just by click the disposal option, the disposal date. Let's say for our example we are using 31st March as our disposal date. The sales proceed is 25,000. Now you need to select the sales proceed account, in which account you can actually having your sales proceed. If you roll through in your chart of account from this drop down options, there are no bank options. That means you cannot actually record the proceed receipt in the bank from here. So just for that reason I'm using capital gain on disposal, which is actually a temporary account. Then depreciation for this financial year, all depreciation. If you do not haven't charged all depreciation, you need to select this option. Otherwise, if the depreciation is up to date, then you can select no depreciation. I'm just selecting this, and the date will be 31st of March 2024, and just click show the summary. Now the cost is 20,000 and the accumulated depreciation is 1,000. Sales proceed is 25,000. Gain on disposal and the capital gain are given here. You can review the journal. So let me do this working in the manual format. First of all, what is capital gain? I need to know what is capital gain in order to actually process it properly. So capital gain is any gain which is actually generated if you have sold your asset more than the cost value. In our case, you can see the asset has a cost value of 20,000, but we have received a proceed of 25,000 from selling this car, which gives us a 5,000 capital gain. So as I have received this value from bank, I'm just using a journal or receipt money in our case to actually recognize our disposal of the asset and the receipt of money into our bank account. And to record the proceed receipt via bank, I am gonna use receive money. Let's say I have received the sales proceed in this bank, and let's say ABC, and the date is 31st March 2024. Description: sales proceed from car unit 1, 25,000 I have received. The account will be, it is the capital gain account that I am using as a drawer account, you can say so. I click save. So if you go to the bank feed of chase checking, you can see, go to the 31st March, and there is a 25,000 unreconciled transaction. So whenever you are uploading the bank statement, and just click match to reconcile the transaction. And from now, just to reverse the capital gain, I'm just using this figure from here to credit to debit. And accumulated depreciation of the car is 1,000 for the 3-month period, also be debit. And we need to reverse the asset value, which is the cost of 20,000. We'll be crediting this. Now the actual capital gain. What was the actual capital gain? The actual capital gain was the difference between the profit and the actual cost, which gives us 5,000, and this will be now. There is a gain or loss on the disposal of the asset as well. If you go through the journal, you can see the gain is 1,000. Actually, the asset has a disposal value of 25,000, but the carrying value of the asset is 19,000. So just the difference is 6,000 within the sales process and the carrying value. But out of the 6,000, we have a capital gain of 5,000. So the remaining balance of 1,000 is actually our gain or loss. So the journal debit, the debit balance for the journal and the credit balance for the journal are equal. So this is the same scenario here. They are just asking to allocate that gain on the disposal and the capital gain to a proper accounting head. So for this gain on disposal, I gonna use gain or loss on the disposal asset, which is 1000, and capital gain account on disposal. This is because whenever you are selling your asset more than the asset cost value, there is a tax impact on the capital gain. So you need to actually present in your financial statement in separate way, which is the gain or loss on the disposal and which is the capital gain on the disposal. And if you just click post, you can see the all three of my asset are disposed. Go back to the balance sheet. From accounting, check the balance sheet. And you can see that under the fixed asset, they are actually laptop and the winding machine, not car, because they exist because I have disposed them in 31st July of 2024. If I go back and change the date to 31st of July of 2024 and update my report, you can see there are no fixed asset available here. From here, I'm will go to income statement. By the way, by receiving money through money receipt, I just actually put this transaction in our Xero system. So go to others income section. You can see there is a capital gain of 5,000, which actually this and this of these two transaction actually offset each other, and the remaining 5,000 will be shown here. And this is the case, and we have a gain on disposal of the asset, which is 1000. From the accounting, go to report, and just look for fixed asset reconciliation report. You can see there is no asset, so just change it from December to March 31st and click update. You can see I have two assets that I have disposed in July. So in the March report, you can see there are two assets. One is laptop and one is winding machine. And the balance under the closing cost, both for the balance sheet and asset register are same. So difference is zero. Accumulated depreciation is same, so the difference is zero, and the closing book value are the same for both asset register and the balance sheet. So the reconciliation report gives you the any treatment that you have missed by showing you the difference in either closing cost or the closing accumulated depreciation or in the carrying value of the written down value. So this is one report actually that can be helpful to see if you have missed any treatment regarding your fixed asset. One more thing, if I go to fixed asset register and let's say I'm listing a new asset, you can use van, for example. Let's say I have purchases in January 1st for, and the van has a cost of like 18,000. Okay, the asset category is for motor cars, and it will select the asset account as well, as I have recently used the motor cars type for my previous car, and the asset account will be the fixed asset, and the accumulated depreciation account will be the fixed accumulated depreciation. and you can actually change if you think there are changes in information regarding the asset, and save or register. Okay, so this is showing in the fixed asset register, but if I go to the balance sheet, you can see up until 31st July, there is no asset other than the accumulated depreciation. So actually the discrepancy report is here for this cost. So whenever you register a asset by a fixed asset register, it will not have any impact on the balance sheet. But for accumulated depreciation, you can see there is a 900 already charged. You can see the difference from the purchase price and the book value is 17 900 actually. So the asset is not actually listed or recorded or recognized as a balance sheet item, but the accumulated depreciation is. So you need to either spend money transaction or create a bill to actually recognize the purchase of the asset and recognize it and in the balance sheet. So this is the pretty simple steps of dealing fixed asset register in the Xero. Here I try to keep my example easy so that anyone seeing this video, they find it useful and helpful and easy way to understand. So I hope it is a helpful video for you, so that if you needed any kind of fixed asset register video regarding how to manage it in Zero, I hope this one will be a good video for you guys. And if you have any queries regarding this video or any topic related to accounting and bookkeeping, you can comment below or subscribe to our channel as well, and follow our Facebook page and LinkedIn page. And if you want any kind of accounting or bookkeeping service, you can go to this website. This is our website, and scroll down and scroll around to see what we are and what kind of service we are offering, and what people are consist of in our team and their qualifications as well. So I will put the link in the description box.